It's about that time of day again. My name is Joseph. Thursday evening, July 19th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is range bound with a bull bias this evening. That tells me to fade the breakouts using the 2-try rule for reliable trading opportunities on Friday morning. S&P is bearish, also range bound tonight as well, and that tells me to look for reliable selling opportunities up above the range highs tomorrow morning. Nasdaq also bearish, but it's got a wide, flat channel this evening, almost like a range on the Nasdaq, which tells me to look for selling opportunities using a hidden resistance trend line waiting overhead. Get a great chart to look at on the Nasdaq tonight, so stay tuned for that. Gold is range bound with a bull bias tonight, and that tells me to look for buying opportunities using the 2-try rule down below those range lows tomorrow morning. And wrapping up tonight, the euro is range bound with a wide range this evening. That's a big clue on the euro, and that tells me to fade the breakouts. And we get a really great lesson to learn tonight on that euro chart right at the very end of this video tonight, so definitely stick around right towards the end. All right, got another great newsletter in store for you guys and gals tonight. We're going to wrap up. Tomorrow morning is a summer Friday, and OPEX Friday, and we got some big moves, a lot of ranges on the charts, right? So we'll be looking at fading those breakouts for tomorrow. Got a lot of great trades, got a lot of good opportunities setting up for Friday morning. Before we jump in and put the plan together, though, I do want to remind you, if you're watching me tonight on YouTube, you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. I'll leave all the links in the description of this video, so grab them there. Also, if you have any questions about anything covered in tonight's video, please remember you can post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over here to the blog at sidewaysmarkets.com. The link is in the description of that YouTube video, and make sure you join our mailing list. That's right. Give me your name and your email address, and I'll send you an email every time I publish something new each day. That way you never miss another video from me. Also, lower left-hand corner, if you're on social, StockTwits, Twitter, Facebook, LinkedIn, wherever you're hanging out on social media, I'm always publishing charts, links, quotes, videos, all kinds of great stuff on my social media channels. Find those in the lower left-hand corner. And how about the charts from tonight's video? How easy is this? All the charts from tonight's video, have them on your computer ready for tomorrow. Grab those charts and be ready for tomorrow right below the video here on the blog. And speaking of tomorrow, how about that free pass? If you're not a member here at School of Trade and you'd like to grab a free pass and come out and join me as a guest in our trade room, this is your opportunity to grab that free pass in the upper right-hand corner. And don't forget, if you have any questions, you can always call me in the office, send me an email, drop me a comment right in the comment section below, or you can always hit me up on live support on the right-hand side of our website. All right, looking good here. Boy, it's been a great week here so far. It's been a great week. This is the third week of the month of July. We got like 1.5 more weeks left, right, to go of these July trading sessions. As I mentioned earlier this week, this tends to be the sloppiest month of the year. A lot of kids are on vacation. A lot of parents are using that as an excuse to get out of the office. And usually by August, we usually start to turn that corner. You know, back to school now starts coming in, and so things start getting a little bit more, a little bit better at staying between the lines, right? And we definitely saw some quite sloppy, inconsistent price action this week. But, as I warned you earlier this week, this was going to be the theme, right, of this week. And so if you aligned your expectations properly, right, it was a great week. I thought it was a great week here so far. But as always, though, we're only as good as our next trade, though. And so tomorrow morning, Friday, July the 20th, first of all, what do we know about tomorrow? Well, tomorrow is that third Friday, 1, 2, 3. It's third Friday of the month. That tends to have a bit of a self-fulfilling prophecy to it. It's OPEX tomorrow, which means, markets like the E-minis are definitely going to be susceptible to a lot lower volume as traders use the excuse of a summertime Friday combined with the third Friday of July. At the same time, you can also see this no major news tomorrow, right? And so really a lack of major news. I'm sure a lot of folks are looking at this going, you know what? I'll see what I can get tomorrow morning early. But most people are probably experienced traders are going to look at this and go, third week of the month of July, right? No major news, been a sloppy week, not that bad, but it's been, again, like we talked about on Monday night, it's been a third week of July. This has pretty much been what we've been talking about all week. So I would expect tomorrow to be an early in, early out type of day. I would expect tomorrow to be a morning where we're probably going to get a couple good hours of price action, maybe 8 to 10:30, something like that tomorrow morning. But you really want to get to it early because the afternoon tomorrow is probably going to be a little bit loosey-goosey, right, because of that low volume. Now, don't forget Friday mornings, right, again, always early in, right, early out. But what else do we always talk about, too? Those prior week levels, right, those prior week open, high, low, and close levels, those will start acting as magnets, and we get a bunch of them overhead. So E-minis, right, gold, euro, these markets, we've got a lot of prior week levels that are just outside of the last couple days trading ranges, and so we may start seeing those act as magnets tomorrow, right, and we can use them as support and resistance. So early in, early out tomorrow, again, third week of July, no major news on the schedule. You can already smell, right, the exhaust from the boat, right? You can already smell the barbecue grill warming up there for a summertime weekend. So early in, early out, and watch those prior week levels because they're probably going to sneak up on us, right, tomorrow and be useful as support and resistance. So let's jump into some charts here tonight. We got crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on the euro. Starting off tonight with oil, the black gold is bullish but range bound this evening, and that tells me to look for buying opportunities using the 2-try rule below the range lows tomorrow morning. Now, if price runs higher, I can buy if I see enough strength to new highs, but in reality, it would be wise to fade the breakouts going higher with a target going back into that range tomorrow. Now, one of the terms you're going to hear a lot tonight will be ranges. We have quite a few of them on the chart tonight. On the oil right now, we've actually got 2 ranges here. If you look left, obviously we've got that previous trading range, right, from earlier in the week. So you have to think there's a chance, right, that this could just be one big pendulum swing, right, and we may end up seeing this market collapse back down to that prior week low, right? So there is potential for that. Right now, there's not enough evidence that's going to be the case just yet, but you got to think that's an option for tomorrow, and we'll talk about kind of what that would require, right, for us to start wanting to trade short, right, down to that prior week low. So we'll talk more about that here in just a second. At the same time, right, that prior week low also reminds me here too, right, the prior week close is up top here, right? So this isn't completely out of the picture tomorrow. 1 leg, 2 legs, 3 legs, right? So that's not completely out of the picture there tomorrow as well. So we may see a good break out of this range, and we'll talk about, right, the best ways to trade that, right, in just a few moments. The big news, though, was, we talked about this last night, right, on the newsletter, right? We had that wedge, right, coming out of last night's newsletter. We talked about the fact we're looking for that big drop down, right, the failure, right, and then bam, right, that big move higher. Now, the amazing part of this is that if you were to pick up a newspaper right now, the headline would read, Saudi Arabia talks about, having an inventory crunch, and, the month of August is going to be low inventories for Saudi Arabia. And everybody's going, oh, well, the market jumped higher because of the news. The news? We talked about this darn wedge 24 hours ago. right? No word about Saudi Arabia and low inventories and crunching and all kinds of bullishness, right? So once again, we see examples that the chart leads the way, right? We can listen to the news media. The news media can try to tell us why it happened, but anyone who watched this newsletter last night was ready for that rally higher. So very, very good job. I get a lot of emails and a lot of comments from you guys today talking about making money on that move. So great job. And what a great example about the news is just hogwash, right? They're making it up, guys, right? They're making this stuff up as they see it, right? We knew this ahead of time. We didn't need the news to tell us that. So a very, very good example of the chart is all we care about. So that was the big push, right? Now the big question is, at this point is, we got this big run higher, right? The big question is, did the bears take control? You know, wasn't this something we talked about last night, right? Or was it the night before? They all kind of run together sometimes, right? But when we have a strong move higher, right, what has to happen? The bears have to get what, right? Strength, pullback. They've got to run this thing lower, right? They've got to go strength, pullback, strength, go lower. I don't see it. I just don't see the bears having control right now. Now, you know, the nice thing about trading is that, you know, you could argue that, you know, maybe this was strength, pullback, strength. Maybe that was it. But, you know, if that's the case, then why are we not getting a sell off of that, right, off of that trend line right there? You know what I mean? This is this leads me to believe that something is up, right? It leads me to believe something's up. So we're definitely bullish. We have this bullish bias to it. That's the moral, right, of the story. And so we're bullish. I want to be a buyer, right? I want to be a buyer right now until proven otherwise. The big thing here is we introduce, right, a trading range right in the middle of this. And this is pretty sloppy. And I want to warn you because we get a lot of really sloppy charts today because today was a real loosey-goosey type of price action day. It was a day where you really had to be careful today because those markets didn't move, right? Wait till you see some of the next charts we're going to grab here in a moment, right? Anyways, the bottom line is if you take that range, right, and you copy it up, right, copy it down, you can see it really fits well like a glove, right? So I have a lot of reason here now to think that range combined with our bullishness, right, are the two, right, big key components right now. Okay, so it's a range-bound market, right, and it's bullish. Those are the two big factors of this right now. Okay, so obviously, and we've talked about this many times before, right, but when we have a range, let me clear this off real quickly, right, strong move up into a trading range, what are the two types of patterns we're looking for? And I know we talked about this earlier this week, real quick. What are the two types of patterns? The first pattern would be a one try, two try failure to the high. The second one would be a strong fake out, breakout, pullback through the high, right? We would buy that one try, two try failure. We call this the two try rule, right? Or, right, it's the strength break higher. How strong? Strong enough to get the moving average above, right? And then it's a one, two-legged pullback for that follow-up move through, right? So we go back to our range now, right? There's our range. I'm looking for that one try, two try to buy, or, right, we go through the high of that range, strong move up. How strong? Strong enough to get that moving average up. It's a horrible line, Joe. Horrible line, man. Bob Ross, he's rolling over in his grave right now. Or, right, that happy little fake out, breakout, pullback, right? It's a happy little two-legged pullback, right? That fake out, breakout, pullback pattern, right? Going higher here. So those are going to be the basic principles, right, of what we're looking for tomorrow. Now, at the same time here, right, I've got this beautiful rising support trend line coming off that low, right? Wouldn't that be great? One try, two try. Well, let's do it again. Let's go. Let's draw, come on here. Let's get a good color here, right? It's a good color, right? So one try, two try, moving average comes down, right? Moving average comes down, one try. Come on, Joe. Two try. Now we know where their stops are, right? Now we can buy into those stops. If we can get it, right? We can look for that pullback, right? It's what we call a two-try failure, two-try failure, right, into a bullish strength, right, into a bullish pullback, right? Again, this whole area down here, right, this whole area down here is ripe, right, for a buying opportunity here, right, for tomorrow. Now, as we go higher, right, as we go higher, this is where it's all about one thing, and that is strength. Right, you got to remember that trading range, right? That's the big kahuna. So we've got to get that strong move higher, and it's got to be strong enough. It's got to be a real strong move. This breakout higher needs to be one of those moves where you go, oh my goodness, everyone's going to want to buy this pullback. Right? It's got to be really strong, right? What I don't want is I don't want this little tiny higher high here. That's not going to be enough. Right? I'm going to want to see it really go strength, real strong. Because what's going to have to happen is I'm going to have to be confident enough that they're going to be able to pull back and at the very least retest that high. Okay? And what you're looking for is you're looking for basically something like we saw here, where it was such a strong move that as soon as it pulled back, right, buyers were jumping all over it. That's the type of strength that we need. So we know that as soon as it does pull back, right, buyers are going to come in. And again, I call this the fake out, breakout, pullback pattern, right? We talked about that earlier, right, in the week. All right. Now, with that said, I'm also going to be watching for a selling opportunity here, right? So now we kind of know what the buy side looks like. What would the sell side look like? Well, the sell side's relatively easy if we go higher, right? One try, two try, and again, I'm going to be looking for that buy, right? But again, the target's going to be back to retest that high. It's not going to be a very advantageous target. That's a big word. That means it's not going to be a big target, right? It's going to be a very small target up there, and I'll leave a little portion to run to that prior week close, but I'm not expecting a lot up there just because of this range. Okay, another option though is the one try, two try, failure into a pullback back down. Now, this is where the bias, the bull bias comes into play, right? Remember, we're bullish here. We're not bearish. So for me, I can't just sell that buyer failure. Remember, if the market was bearish, then I could sell that buyer failure, right? One try, two try, buyer failure. I can't sell that buyer. It's not reliable enough. What I'll do is I'll sell the pullback after we get it, right? After we get it. It'll, and again, be aware, this is not a great example of it, but it will look like this. One try, hit the moving average, two try, back down, right? Failure, back down. Again, this is a bull market, right? You're not even thinking about selling this market at that point. That's why it's so sloppy, right? What you want to do at that point is, right, you want to buy that market. But again, now that we're range bound, right? One try, two try, failure strength, right? Back down, sell that, right? Sell that pullback back down. Okay, now, how about the downside? Okay, again, that prior week low has a big, big magnet on it if we can prove enough breaking below this range. What does that look like? One try, two try, strength. Remember, if we see that one try, two try failure, we're buying that sucker, right? One try, two try, strength. If we see that second leg, right, kick some butt going lower, mark up that low, mark up that high, right, and we're trying to sell as close to the high of this larger range, right, close to the high of that larger range as possible. Target one at the low of the range, runner at that prior week low. And then don't forget, if we end up back to that low, one try, two try, we're likely coming right back in, right, to that trading range again. So be very careful selling below that low. A lot to keep your eyes on tomorrow on the crude oil. And don't forget, if you're here for the first time today, I'm using a lot of terminology that you probably haven't heard before. Two try rule, seller failures, right? Bull bias, bear bias, right? A lot of terminology in the business of trading. So let me give you a shortcut, right? Just so that you get the most out of this time we spend together every night on our newsletter, I'm going to put a free trading course in the upper right-hand corner. Okay, promise me you'll take the time, enroll in that free trading course. I want to give you a shortcut, a deep dive into everything we talk about here on our nightly newsletter. Okay, so if you're here for the first time today, pause the video, grab that free class. Okay, then check your email, because I'm going to send you an email with a link to watch a video, a bunch of videos actually, that will show you the patterns, how I use them on real charts. That way you can use it to improve your own trading. All right, guys, that's the crude oil. And again, the key here is bull bias and range right now, right? Those are the two keys here right now. Now, let's go to the S&P. Like I told you, a lot of ranges right now. Here's the S&P. The Emini is bearish with a range this evening. And that tells me to look for selling opportunities using buyer failures and the 2-try rule up above the highs tomorrow morning. I also need to avoid chasing this move lower, right? A retest of the low can easily become a buying opportunity with seller failures, because you'll be below this trading range. Now, as you can see, I had to be a little bit of a sleuth on this one, right? You're going to see a lot of these almost hidden ranges, right? We saw that on oil, right? At first glance on oil, you really don't see that range very well, right? Until you put on the range expansions and it fits like a glove. This is very similar, right? You see here on the S&P, right? First of all, we can easily tell the market is bearish, right? Bears have control of this market. Now remember, that's important, because as we discussed earlier this week, right, when the bears take control, what do the bulls have to get? They've got to get that strength, pullback strength, right? They've got to get that reversal. They have to take control. Okay, have the bulls taken control? Did they do it here? No. Here? No. Here? Hell no, right? So the bears have the edge right now. Most important thing is, and again, don't ask me why this is the range right now, but that is the range. You can easily see the market rotating back and forth, right? It went into a little bit of a hissy fit there this afternoon. You can see, right? You can see it definitely was a little bit cranky. Apparently, it apparently didn't want to react very well this afternoon. You know, we know these summertime sessions, right? Get to it early, so we know we have a range. Okay, what do we do with a range? Well, it's bear bias, right? So now, of course, unlike oil, which is a bull bias, bear bias now, right, into a trading range. Okay, now what's the plan here for that? Well, it's the exact opposite as we talked about for oil, right? It's the 1-try, 2-try failure into the fake out, breakout, pullback pattern, right? It's the 1-try, 2-try, sell into their stops failure, and then it's the strong move down, right? How strong? Strong enough to get that moving average below, right? And it's the 1, 2, right? Sell into stops, fake out, breakout, pullback. Now the challenge in this example, ready? Back to our chart now. The challenge in this example is, there's the range, right? Here is the range right there. So selling above the high is easy, right? It's the 1-try, 2-try, and again, because it's a bear bias, we can sell into the stops, we can sell the failure, right? 1-try, 2-try, and then as long as we avoid the middle, we can sell it. Just again, make sure you're selling it right up around the high of that range, right? So it's up, 1-try, 2-try, failure, strength, pullback, back down again. Okay, so that's going to be the easy part, right? Failure into pullback, right, and back down, right, and back down we go. Now, don't be spooked if this market runs high here, because we take the size of that range, copy and paste it up, copy and paste it down. Okay, so this is resistance up here, right, between this 13.25, right, and that 16, 17 area there overhead. That should be an easy area here for us up, 1-try, 2-try, failure, strength, right, and then back down we go from there. But here's where things get interesting. Now, you would also expect, well, what if we go lower? Well, strong move down, right, fake out, breakout. That's going to be tough. That is a tough pill to swallow. Why? Because look where we are, right? There's your measured move, right? It's clearly going to be the objective for the bears, right? The objective right now for the bears, I would assume, right, the sellers have their targets down at that low. So I'm trying to sell down here where I think sellers are going to be buyers. Yeah, doesn't make any sense, does it? When you talk your way through it, you go, wait a second, that's the opposite of what I should be doing down here. Exactly right. I should be looking for a buy down here. One try, two try. Now remember, right, we can't just buy the failure, right? We can't buy this failure. Why? Because we're bearish. We have to wait for that strength, right, and then look for, right, the pullback coming back up. Right? That's the key. That's the key when you're going against, right, the bias of this range. Don't take the failure like you would off the high, right? I'll take the pullback once I see that momentum start to shift back, right, in favor of the bears. Now, is there a scenario where we go lower and we can sell? Absolutely. Strength, pullback, strength. At any moment, if we see a 1, 2, 3 breakout, 1, 2, 3, strength, pullback, strength, the key is we've got to see a strong move lower, a pullback to the moving average. Yes, it has to pull back to the moving average, and then we look for another leg lower. You want to see a good example of a strength, pullback, strength? Right there. That is a good example of a strength, pullback, strength. It is a strong move down, a pullback to the moving average, and a strong move through, right? In a bear market going below that range, I'm going to have to see strength, pullback, strength, then, right? And again, it's got to be really strong here. Then I can start looking for those sells, right, using that level of resistance or that previous level of support as resistance. The problem is, though, this is very tight quarters down here. Why? Because now you've got a larger measured move, right? So like I said before, right, we might be able to thread the needle, so to speak, down here, but it's one of those situations where I'm going, you know what? This is one of those times where, yeah, I could battle through that and scalp my way through it, but it's probably not going to be worth our time unless we can get something that really fits well tomorrow. So I'd rather go one try, two try, failure, and back up in. That'd be a whole lot easier, and there's a whole lot more profit to make doing it that way, right? Than trying to figure out when we've broken out strong enough down here. Very, very difficult. Or one, two, failure, strength, right, pull back down we go, overhead. Now, how does this market turn bullish? How do we turn bullish? Strength, pullback, strength. Same way we turn bearish. If we do, find that new hidden channel and then look for your traps, look for your failures, look for your strength and pullback patterns, right, going higher here. And again, if you want to learn a lot more about those traps, failures, strength, pullback patterns, grab that information icon in the upper right-hand corner, grab the free trading course, right, and learn more about those patterns, right? I get so many great emails every day from you guys about learning those patterns and making money with them. So, right, do what literally tens of thousands of people have done, right, and grab that free trading class and learn these patterns. That covers it, right? That's pretty simple there on the S&P. Okay. Now over to the stellar performer of the day, a chart that only a mother could love, right? Look at this Nasdaq. Nasdaq is bearish. It had a bit of a temper tantrum today, as you can see, right? Wide, almost flat channel, which should be traded like a range. Now, if you watch this nightly newsletter, right, or if you're a client of mine, right, you know the big clue is this channel. Right? Look at this channel. This channel is so flat that it's almost a range, right? And that's why I say, right, the big clue here is it's almost a range. So we want to get this market to go up here. Now, I think the big clue is this hidden resistance trend line, right? If I draw off the low, there's the midline, there's the high of the channel. Oh, but looky, if we go all the way up, right, we find kind of that hidden, right, kind of that hidden trend line, and you can see, boy, is this all symmetrical. So I've got my eyes on that hidden trend line up there, right? That hidden trend line, that will be a great place, right, to be a seller tomorrow. Okay, so that hidden resistance trend line coming down overhead, but be careful. Okay, be careful trying to sell this until you see the buyers try twice, because the size of the channel will allow the buyers to get too much momentum as they push higher. This is one of those lessons that took me almost 10 years to learn, and that is the width of the channel. Okay, you'll notice the width of that channel. Now, we just talked about this today in our trade room, right? About how when a channel is narrow and steep, right? When a channel is narrow and steep, we can be aggressive at selling a market that jumps, fails, right, and collapses back down, right? We can sell that sucker pretty aggressively, because when the market is strong to the downside with a narrow, qualified channel, right, what do we know? We know the odds are very high, right, that we sink back down to retest that low. But when I have a wide, almost flat channel now, guys, think about the difference in psychology. By the time we get back to the high of this channel now, right, by the time that we end up back now at the high of this channel, I'll bet most traders are looking at this as a bull market. So the moral of the story is the wider the channel, the larger or the more momentum is allowed to build. Why is it important? Because now we'd expect this market not to just roll over and play dead, right? But to expect there are going to be buyers waiting to buy this before we make that drop back down. Okay, so the rule of thumb is the wider the channel, the wider or the larger, right, this kind of our patience needs to be when we sell this sucker back down again, right? Now we got to gap up here a little bit, right, on this opening bell here in Asia. Again, it's late in the month of July. It's going to be a little bit choppy like this tomorrow, most like I mentioned earlier, right? We got OPEX tomorrow, so the E-minis are probably going to be the big ones that take on the chin for this. But really looking for here is, right, if we can get this move to go up, right, there's potential now that people think this market, right, is a bull market. I'm going to want to get that moving average coming over. Let those buyers try to buy that pullback, okay? Let them try, right? Let them try. If they fail, we've got easy pickings now. Buyer failure, seller strength, seller pullback, right, on the way lower, right? This will end up being a trap, right, into a buyer failure, into a strength, into a pullback pattern. Again, upper right-hand corner, grab that free trading course. You can learn more about it there. All right. Now, don't forget though, right? If we get this strong move higher, they hold that pullback to the moving average, right? This could easily become a bull market. If we see a strength pullback, strength, right? We see it blow out higher here now. Well, yeah, now we know what's up, right? Now we know the bulls have control. So strength up into that hidden trend line, pullback, strength. Now what do? We find that new channel, draw off the high. Okay, the reason why you draw off that high is because this trend line here isn't going to be very easy to use. It'd be a lot easier to use that one right there, right? By that parallel line, right? Usually it comes right back in and around that prior swing too, right? So we'll look to combine, right, those levels for our buy. Where's our target at that point? Our target at that point is back up to retest, right? Yesterday's high, right? Not today's high, but yesterday's high, which is, you know, pretty much, right, Tuesday's high, right? Back there at 37 3/4. Okay, so if price goes up, again, looking for that one try, two try, failure, strength, pullback, and back down. What if the market goes lower, right? So up, failure, strength, pullback, back down. What if the market rolls over here, right, and runs lower here again? What do we do then? We keep waiting to sell high here. Right? It's very obvious. They've been loving on this top of this channel here right now. So we keep waiting for it, right? If they want to go lower, we'll wait for it up. Keep on selling it back down again, right? And keep using, right, that channel high. Again, the goal here would be, let's get it up. Let's get a nice big one. Failure. Let's get a nice big one there. That way, we know where our target is. It'll be back down to retest that low, right? We know what that target is. Okay, the only other real scenario that I kind of see here would be if we just sink and we keep on sinking, right? If we kind of just run and keep on dropping, then obviously we know something else has happened here, right? We're going to stay patient, try to use this area, right, as resistance, and we'll try to sell as high as we can right there tomorrow. But again, it needs to be obvious that something has changed, right, in that market, and we're breaking lower and staying lower, right, below the already very well behaved channel, right, that we have here right now. So the key clue on this is the width of that channel. Okay, and we're going to see another example on that in the euro. The euro, in my opinion, is even more important to use this little trick. So make sure you stay tuned on that here, right, in just a few moments here. Now, how about some gold? Okay, like I said earlier, this, kind of the topic of tonight's newsletter might be these hidden ranges, right? These hidden ranges. Gold is bullish. Yeah, we're bullish, but we have a range this evening. And that tells me to look for buying opportunities using seller failures down below the lows, and beware trying to buy the break higher, right? Because again, we have a range here. I'm going to wait for clear proof of a strong breakout to new highs before trying to buy that two-legged pullback tomorrow morning. Now, it was obvious here that something happened overnight and shook this market up, right? We had that bull bias, right, going higher here, and then, we came out and the market didn't even think twice. So this, obviously there was something that came into play here in the overnight session. What is true to form in a third week of July summertime trading is look at this big move down and this move right back up, right where it came from. A pure low volume run, right, to finish off that day. And at first glance, right, my first instinct was, oh, okay, this is just kind of like a hidden channel, right? We draw the trend line off the low, right? There's my channel and there's my midline, right? This should be easy just to buy this thing now, right? Seller failure into strength into pullback, right? And pull back up we go. And I'm still going to look for that trade. That's still what I'm looking for right now. But it definitely is important to recognize the fact that all of these highs are lining up, right? And boy, oh boy, does that look suspicious. So I have to, this is a lot like oil, right? At first, it doesn't feel like a range, but after further investigation, you can definitely tell it looks like something spooked the buyers, right? Something spooked people. They sold it off. We came right back into it and settled right in here now, right, in this range. So it's a bull bias. What do I want to do in a range with a bull bias? I want to go down, one try, two try, right, and buy below the low. Or we want to what? We want to go up, strength, fake out, breakout, pull back, and look what's up there, the prior week low, right? Those prior week levels, right? Always on our radar when it comes to a Friday. So just kind of looking at this in a bigger picture here right now, momentum is definitely bullish. There's no question about that, right? We get a huge run, right, going higher, and maybe, we'll see. Tomorrow's a summertime Friday, so we'll see. But maybe, right, we get that big pendulum swing, right? Pendulum swings down, pendulum swings up. Maybe they run this sucker all the way up to that 1239 area. Remember, 1240 is the midpoint of of that triangle, right? From late in the month. From midway through July, excuse me, right? So 1240 is the middle of that range. Remember, ranges are acting like magnets, right? Now, obviously, this is this is a pipe dream right now, but just to give you an idea of what is possible here tomorrow if this ruckus continues, if you will. So my goal is we're range bound. We know we get a bull bias, right? We're down, right? I ultimately want to buy, right? I want to buy here. I want to go lower, right? I want to use this trend line, and really I want to go up for a buy off that trend line, right? One scenario would be up, trend line, right? Up, trend line, and buy that failure. That's one scenario, right? If we go lower here now, then we're going to have to really respect that trend line, right? If we go lower here now, get above it, failure, strength, pull back, and buy from there. The key will be to use that resistance trend line as support, two-legged pullback, failure pattern, right? Pullback pattern. Those are some easy patterns, again, using the trend line, right? Use that trend line as support instead of resistance, right, to buy nice and low. The hard part's going to be, right, if this sucker tries to go higher here without pulling back, right? Because what is likely to happen is we're likely to see something like this, right? It'll go up, it'll look good, right, but it'll pull back, and the problem will be the moving average won't be high enough, right? It'll be a 1 try, 2 try, failure, right, and back in, right? Now remember, we have that bull bias here, right? So it's 1 try, 2 try, failure. Don't, right, be very careful selling this market right now, right? Be very careful selling that market because you're going to have this rising support trend line here. This is going to be a really difficult trade to take, right? It will. Just because you've got that overall momentum, right, going higher, you got that prior week low. What I'd rather do is go 1 try, 2 try, see that break higher, right? Get that new channel and get this buy in a much more reliable environment, right, above the top, right, of that range. Another option would be, right, a strong move up, strong enough to get that moving average clearing above, and I want to use this high now, right, as my area of support, right, to be a buyer. Okay, so I really want to try to push through the top of that range before I start committing, right, to buy and pullbacks here. And again, the target up here is pretty easy, right? Prior week lows, an easy magnet, right? That 39.5, 40 area is an easy magnet. That will be our targets waiting here as we go, right? So for the buyers, right, it's fake out, breakout, pullback time going higher. It's 1 try, 2 try. Use that trend line, right, as support, right, down below that low. Or, like I said earlier, right, it could be failure off that trend line too, right? That will also work, right, as well. How do we turn bearish? Strength, pullback, strength. Simple as that. Could easily happen. Could easily happen. We had that trend line coming down, right? That could easily hold as resistance. If that's the case, now we've got the benefit of multiple trend lines now. Strength, pullback, strength. We can use what was support as resistance, and we can look for a sell going back down to retest those lows. All right. Don't forget, out of all of these markets, right, on a range, right, on all these markets, if we sit right in the middle, stay away. Right, stay away, wait till we get the 1 try, 2 try, and buy that failure. Avoid the middle, buy the low, sell the high, right, and trade that 2 try rule. Now, last but not least here on the euro, a slippery little bugger, right? Euro's range bound and heading into Friday's session. That tells me to buy the low and sell the high using the 2 try rule. Now, the biggest clue on this chart is the size of this range, reminding me the larger the range, the larger the 2 try rule that I need to wait for. This is the same basic principle, right, as we talked about earlier, right? Remember we had that bear channel, right? And a bear channel, a wide bear channel. What does a wide bear channel tell me? It tells me when the market goes back to the highs, it's going to be darn bullish by the time it goes back to the highs. The wider the channel, the wider the 2 try before we can get that sell back down. Same thing is true for a range. If the range is really narrow, there's not much momentum, right? So we can be pretty aggressive. 1 try, 2 try, back in. Right? 1 try, 2 try, back in, right? We can sell those highs. We can buy those lows using a small 2 try. Right? But when the range is larger, right? A larger range, now what happens? Now momentum is greater, right? Now momentum can build. Now when I go back to that low, can I go 1 try, 2 try, buy that? Probably not, right? It's probably going to come back up and go again because that momentum is so strong, right? So now it's 1 try, 2 try, then we go back up, right? So remember, wider the range or channel, right? The larger the range, the larger the channel, okay? The larger the 2 try rule is going to need to be, right? So we see this strong move higher here. It's dangerous right now to try to sell that failure. Not only are you selling right in the middle, and you don't want to trade the middle, but again, that big move up, we're probably going to see another attempt here. Why? Because this market is bullish at this point. Then we can look for the move going back down in. And what that would look like is it'll basically be a 1 try, a 2 try, and then you'll see a smaller, get that thing up here, right? You'll see a smaller 1 try, 2 try, and that's the one now, right, that I can now look to sell, right? Sell that pullback, coming back down again, right? So bottom line is you're expecting another attempt higher. Then we look for that 1 try, 2 try, right? Again, it's a larger 2 try, 1 try, 2 try. Then once we have those bears, then we can look for that failure, right? The strength, right, to sell as close to that high as you can, right? You don't want to sell up around you don't want to sell the middle, right, of that range, right? Buy low, sell high, right? Avoid that middle, right? So wait for it, 1 try, 2 try, failure, strength, pull back, back down in, or 1 try, 2 try, right? Back into that range. Remember, if we keep going lower here, this will be very bearish, right, on the way lower. So you're going to wait for it to go up, try again, and then we can look for it, right? So it's 1 try, 2 try. Larger the range, larger the 2 try, right, that we need to have. What would a breakout look like, right? What would a breakout look like? It would look like this: strength, pullback, strength. Big, strong move up, mark up those highs, bring it to that low, right? Buy that low, right? Buy that low. I wouldn't hold your breath on that. I wouldn't hold your breath on that. We get that prior week close right there. I would think with that strong first try, we get a second try up around that prior week close, and then we can look for that sell back down into that range, right, middle tomorrow morning. Or down to that low, 1 try, 2 try again. Look for that big second try, right, and then we're back up, right, into that range. If we sit right in the middle of that range here, it's going to be very, very choppy. And believe me, I want to trade just as much as you want to trade. I run a trade room every day, and I want to take as many trades as we can find. But it's in your best interest if we sit right in that middle to really be careful, stay away from that middle. The only other scenario would be if we see a trading range inside of that range, then we can start looking at the 1 try, 2 try, kind of above the short-term range, using the top of the range. But that would be after quite a while of sitting inside of that range, right, tomorrow morning. All right, guys? So lots of great lessons today, right? Hidden ranges, right? How to find those hidden ranges. You can see lots of ranges here today that at first glance, right, they weren't obvious at first, but once we look left, we put this back together, it was relatively whippy today, right, but we are looking at quite a few ranges. So fade those breakouts. Make sure you understand that rule about the wider the range, the wider the 2 try rule. And again, I've covered a lot in this video newsletter, right? I try to jam-pack this thing with as much value every evening as possible. If you want to get a much deeper dive into the entire strategy, grab the free trial. It's available on our website at schooloftrade.com. There's also a link in the upper right-hand corner of this video. While you're here, don't forget we've got beginner, intermediate, and advanced classes here at SOT. There's a place for everyone, whether you're brand new or you know about trading, but you still haven't been able to earn consistent profits. Check out our classroom set selection right on our website. And don't forget, I'm always here to help. You can always call me in the office if you need help this weekend, right, or tomorrow. I'll be here in the office, right, or hit me up on live support, right? I'm always there to answer all your questions. Guys and gals, if I don't see you tomorrow morning at 8 o'clock Eastern time, I look forward to seeing you, right, not tomorrow night on the newsletter. The following newsletter, the next newsletter will be next Monday evening. Now, be well out there. Be nice to each other. Will you have a great weekend, right? Stay safe and come back and see us next time. Adios, amigos. Bye-bye for now.